Good day, ladies and gentlemen, and welcome to our class on trading triangle chart patterns. Today we're going to look at the different types of triangles and how we might incorporate those into our trading, as triangles are the largest part of chart patterns and the easiest to understand. Now, I would appreciate it greatly if you could click on the subscribe button down below or hit the bell icon. Either way, I won't bother you with anything. You won't get emails from us or anything. You'll get a notification only when I upload a new class. So it's very important to me that you do subscribe. So please take a second and click on the subscribe button down below. Now, chart patterns are well documented in technical analysis literature, and they are based on the psychological phenomena that occurs between the buyers and the sellers of financial instruments in liquid markets. Pattern formations do not form a trading system, but rather provide an indication of future trend of a share or an asset as the price breaks key psychological barriers in the form of support and resistance lines. Oh, that was a mouthful, wasn't it? Now, I'm sure you've heard about chart patterns for online trading and their relation to technical analysis. You've probably heard about doubles and triple tops, heads and shoulders, rectangles, pennants, flags, a cup and saucer. There's tons of them out there. Now, there's only a handful of recognized patterns. The rest are gurus who have come up with them. I've seen bat wings. I saw, what did I see the other day? A flying saucer. They just keep coming up with these things. Now, the fact is, chart patterns are well documented, and they've been tested and tried over time. These same chart patterns work for all assets, whether you're trading cryptocurrency like Bitcoin, whether you're trading the euro or dollar, whether you're trading in the CFD market, or whether you're trading in ETFs or you're trading in bonds. They work great for shares, and they also work great for indices, as well as metals and golds, commodities, you name it. Chart patterns work well in all financial markets, whether very short term, like a day trader, or swing traders. But most of us that are attending this class are probably CFD traders and trade in 1, 2, 3 day increments, and chart patterns are great for that. And they also adjust quickly in time frames. Now, in order to have a complete understanding of chart pattern trading, we should also gain a good understanding of one of the most common on-chart formations. What I am referring to is triangle formations. Okay. Today, we're going to leave all the other ones out. In fact, I don't trade from any of the other ones except for triangles. But let's take a quick look and see at all the different patterns out there. Okay. As you can see on this chart, we have, moving from left to right, we have double bottoms, bull flags, bull pennants, ascending wedges, descending wedges, triple tops, bear flags, bear pennants, inverted head and shoulders, inverted cup and handle, expanding wedge, cup and handle, and head and shoulders. All of these are the primary patterns used in market structure. Like I said, there's a lot of other ones out there. But I lump bull pennants, wedges, descending wedges, bear pennants, expanding wedges into a family I call triangles. That's it. Now, triangles have ascending triangles, descending triangles, and symmetrical triangles. I don't even separate those. They are all triangle patterns. Now, the triangle pattern is a specific figure formed on the price chart. Typically identify when the tops and the bottoms of price action are moving towards each other like the sides of a triangle. So the difference really between an asymmetrical triangle and a symmetrical triangle and a descending and ascending triangle, even a wedge, is the angle on which these tops and bottoms are moving at each other. So what's a symmetrical triangle? It's when the two angles, the top and the bottom of the support and resistance line, are moving at the same degree. An ascending triangle means one line is horizontal while the other one is moving up. A wedge means the two angles are moving at slightly different degrees, but still forming a triangle pattern. So as such, many breakout traders use formations to identify breakout entry points because we know as price travels deeper and deeper into this triangle and gets tighter and tighter into this apex, because what we have is two angular lines coming towards each other, getting tighter and tighter, that sooner or later price will break out of that formation. Now what we're looking at in this chart is a symmetrical triangle, because we can see that the tops, or the line at the top, is drawn across the height of the candles and the wick of the candles, and the bottom is drawn underneath the candles, and they happen to be moving on the same degree angle as each other, so they are a symmetrical triangle. Now we also have to be concerned with the base of the triangle. The base of the triangle is a little bit difficult to determine where it should be. Now, if we look on this chart, we see that the base of the triangle is here. It's not that it started here. The base of the triangle is actually to this point right here, because that's when the two lines were now forming and form the triangle. Okay. So the base would be this point to this point, because we use this base for a lot of our calculations. Now, the key to remember is typically with symmetrical triangle pattern, the expected directional breakout is unknown. The reason for this is that the bullish or bearish move have equal strength as seen through price action. Now, there are some standard definitions of triangles that want to give you characteristics. Like an ascending triangle should break out and give you a continuation. A descending triangle will give you a continuation, a downtrend. A breakout in this direction, take all that characteristic stuff and throw it in the trash can. The only thing that can tell you what a triangle is doing is the triangle and the breakout point. Period. End. If you get yourself stuck on the fact that this triangle should be moving when it breaks out in a bullish fashion, you're going to start setting up everything to make a bullish trade, and you're going to overlook everything else. Forget it. The only thing you can make a decision on is when the breakout of the triangle occurs and the direction of that breakout. So when a breakout eventually occurs, it is likely to provoke a price move equal to the size of the pattern. What's the size of the pattern? It's that base. So therefore, you should carefully identify a potential breakout in the upper or the lower level of the symmetrical triangle in order to take the right position in the market. So as you can see, we can take this base and apply it when there's a breakout to determine our target points. But at the breakout point, we get a valuable piece of information. We can apply the width of the base to get the target point. We can use the breakout candle to determine the entry point, and we can use the previous candle low wick or high wick, depending on the breakout, to set our stop loss. Okay. So what do we need? We have our target point, we have our take profit point, we have our stop loss point, and we have our entry point. Now what do you have to do? You simply have to calculate your risk management to see if you can afford to make that trade and if the risk is worth taking the trade, because you have all the pieces of information you want. So regardless of whether it's an ascending triangle, a descending triangle, a symmetrical triangle, whether it's a pennant, whether it's a wedge, they all have the same formulas. Forget what the characteristic is. See, like here, we have an ascending triangle. The triangle has the upper side flat and the lower one ascending. In this manner, the top of the triangle are at the same level as the bottoms are increasing. This type of triangle typically has what people would like you to say is a bullish characteristic. When you spot this triangle on a chart, you should be prepared to catch a bullish price move equal to at least the size of the triangle. Well, that's a crock of baloney. I did a study of 562 triangles over just currency pairs in 1 hour. Okay. And I did this across full range of currencies with no prejudicial determination. It was historical pricing. Okay. I found if you followed the characteristic, okay, you were only right 51 to 52% of the time. If you didn't follow the characteristic, you were right almost all the time because you selected the way of the breakout. So why would I want to put my money on the horse that only wins 52% of the time? Maybe I'll take him to come in second place, not first place. Or maybe I'll wait to, I'm not getting enough odds, I'm not getting enough benefit. So it's very important to mention that the ascending and descending triangles sometimes break through the incline level, causing false signals and trapping some traders along the way. And this is a common event. Okay, you can get false signals, you can get false breakouts, and there are rules you need to follow besides just looking at the candle, looking at a triangle and waiting for the candle to break out. Okay, you should always try to wait for the close of the candle that broke out of the triangle to finish. And this will help reduce many of the false signals. I use the second candle. I take the breakout candle and then I take the next candle. I use that next candle as what I call my confirmation candle. When I have a confirmation candle, then I use the breakout candle as my entry point. I set my stop loss at the low point. And yes, I might miss some profit. I might miss some opportunities. But what I'm looking to do is reduce my failures and at the same time only end up with high probability trades. So we have symmetrical triangles, rising wedges, symmetrical triangles, bearish pennants, increasing wedges. We have just about everything that fits in. Anything that has two angular lines coming together to form an apex can be defined as a triangle. So again, we would take our breakout, wait for our breakout. We'd use that to set our buy point, our stop loss, and then we would use our base of our triangle to set the limit. So here you can see, well, let's get a clearer chart here. So here you can see our stop loss at the lowest point before the breakout. Our buy is at the confirmation candle. And then we would set our limit based on the width of the triangle. So here in this case, we have our breakout candle, the close, we have our confirmation candle. And that's when I would enter my trade here. I might have missed a little bit of an opportunity here, but I then don't get the false breakouts. Here you see it in the reverse direction. So how can we trade triangles? Typically you want to buy after the pattern breaks resistance, as it did here at E. It's a good practice to set a stop loss just below the last significant high, which is the example here at D. So, as I mentioned, how reliable are triangles? Well, I did this study. Okay, and as you can see, not how reliable. Candlestick triangles are very, very reliable. This is on how reliable are the bullish and bearish characteristics. Okay, so as you can see, in a 4-hour time frame, I measured each one of these triangles to see if I got the characteristic, or I would have traded the characteristic of that. Okay, you can see it only gave me a 54% correct rate. And then down to, when I used it in a 1 hour chart, I only got a 51% correct rate. So that's not enough to shift. So if that's not important, because it's not weight and data that's important, I just throw it out. I don't need it because I'm going to wait for the breakout to make my determination. So when the pattern ends, the volatility dips into a minimum and the support and resistance lines will be very close. The market will then usually start to show some preferred direction. There's no guarantee of it, however. As always, it's best to prepare for false breakouts and retests of this support and resistance lines. The easiest way to trade this chart pattern is to treat it as a continuation breakout if you want. While there are instances when symmetrical triangles mark important trend reversals, there are more often mark a continuation of the current trend. Regardless of the nature of the pattern, continuation reversal, the direction of the next move can only be determined after a valid breakout. So we want to look at the trend that it's being developed in. If a triangle develops in a well-qualified, beautiful uptrend, it's more relevant. Okay. If it develops in a beautiful downtrend, it's more relevant. When the markets are kind of all crazy and all over the place, you might have an uptrending value, but you don't have a non-random uptrend movement. So the more developed the trend is, the more we increase our success. The final kicker is we want to look at volume. Volume should have contracted right before the breakout and should then expand right at the breakout. This is called the quiet before the storm. And of course, we want to look at the breakout direction. And then we want to use the confirmation. Because you got to be careful. Also, triangles can break out, look perfectly, and then return to their apex. But most of the time when they do that, they break out, return to the apex, and then gather the momentum and then continue in the direction of the breakout. So there are two methods to estimate the extent of the move after the breakout. First, the widest distance of a symmetrical triangle can be measured and applied to the breakout point. That's the one we use. So to sum it up, triangle patterns are easy to spot and provide good risk-reward opportunities. Traders can quickly know that a big move may be near, as well as the profit objectives and the amount to put at risk. Now that you have the knowledge of these three powerful price patterns, you are steps closer to becoming a more confident trader. So thank you. Triangles are not difficult to learn or master. If you set your rules out, your own rules, watch them closely, and don't vary. Write down the rules you want to use. If you want to follow like I do, confirmation, breakout candle, confirmation candle, then enter my trade, okay, that's fine. You want to enter after the breakout. You want volume to increase 5%. You want to see this or that. Write it down. But triangles do exist. They happen continuously, and they are easy to trade. So thank you very much for joining us today, and good luck trading triangles. And please, please, either click the icon button or click on the subscribe button. It's very, very important for me. Thanks.